yields go up, that makes the whole notion behind both equity risk premium, equity term premium, and then specifically any kind of valuation you pop out from discounted cash flows, that's what makes it kind of go down. So that's why I say it's mechanical. Anyone who runs like spreadsheets or big money just stays the fuck out. That's all. Soaring Kiwi, gasoline bounced pretty hard these past 2 days. Yes, it did. Gasoline's more important than oil, by the way. And here's what you can see it looks like. It's definitely worth keeping eyes on. Like, we've spent 7 months shitting on the people who keep pointing out, wait for energy to rebound, wait for energy to rebound. But the entire time we acknowledged there is a risk. It is absolutely there. And it's something we want to keep our eyes very much attuned to, because if energy drives a rebound in inflation, right, then that's not good for all the people who think the Fed is essentially done hiking, which for me, I'm in that category. What will get me to change my opinion is if you see energy significantly continue to move higher. That's what has to happen. Padres Flame, doesn't that give some credence to the notion? No. We give credence when it happens. We give credence when it happens. Because otherwise, it's forcing all the people who've been saying that shit for 7 months to give credence to the fact that inflation has dropped every single month, including this most recent month. Right? So yeah, we definitely want to keep our eyes on it. And by the way, what really matters from an inflationary standpoint, it's not just oil prices. It's oil prices, crack spreads, gasoline prices. That's it. So we definitely want to keep eyes on it. It all matters. It's all important. Padres fan asks, what is causing this increase in oil and gas? Economic activity combined with OPEC cuts. It's not just the cuts, trust me, but the fact that you are seeing higher demand than people were expecting. Russ calling out limited refineries, refining capacity. Yep, that's another issue, but that's a whole, that's a can of worms, right? God. I mean, if you can get higher yields, the short end of the curve than long end, you'd rather go there, right? It is absolutely fuck it Friday. Zirconium, why is there confusion this month whether inflation was up or down? You saw some headlines saying inflation creeped up slightly because those are political analysts. A lot of the political analysts like to use year-over-year numbers. So they're basically saying 3.3% or 3.2% versus 3% year-over-year. But really what you're saying is how inflation behaved 10 to 12 months ago. Month over month, it was 1.68. Which is lower than Fed's target. Padres fan, believe it or not, Russ is right. The U.S. has not built refineries since what, like 70s or 80s? Yeah. NVIDIA is having an interesting day, yep. Jay Jared, we get all the refining we need from India? That's not really true. I actually believe we're getting a lot more of it from China coming up. Besides dollar, anything up today? Not the VIX, which kind of shocked me. Bond yields are up. That's the bigger thing. Bond yields and dollar being up. Energy itself somewhat up. Natural gas is getting weird right now. Look at India's exports to the U.S. No, I've seen that. Yeah. I've seen that. You think its biggest commodity exporter? I assume refined products. Yeah. Rad says the entire world has underinvested oil for over a decade and now wonders why energy isn't cheap. You're not fully wrong. You're not. Right? But at the same time, U.S. oil production has never been higher. Like, it gets really, really wild that we haven't increased refining capacity. We haven't increased transportation. That's the thing that drives me nuts. I remember I worked on a project back when I worked for a certain energy company up in the Northeast, utility slash energy company. And like the state of New York blocked us from building a pipeline from the shale fields in Pennsylvania up to New York. They were still using just as much natural gas, just now it gets taken via rail, via truck, instead of by a safer pipeline. It's the fucking stupidest policy ever. That's what I will mock the greenies on all day, every day. Hey, Bitaska, you just joined. Any specific bad news on semis you missed? Tech's down. China's down. Bond yields are up. Right? Like, yeah, I mean, they're not going to break the rule of every other tech company, right? Rad, but where are the new upcoming projects? Guyana, offshore Brazil. Angola. Right? Like, Rad, honestly, I'm going to tell you right now, and I try not to shit on the oil bulls too much on here. The underinvested, like, theme meme pushed along by, quite frankly, crazy, like, anti-Americans and people like that. Like, a lot more of it's in your head than you think. Right? We don't like digging holes. Yeah. Yeah. You know the productivity of a well, particularly a deep water well today compared to 5 years ago, compared to 10 years ago? Have you read about Sakhalin Island, which I know we're out of because it's off the east coast of Russia, right? Have you read anything about Guyana? Like, God. The upcoming projects and exploration is occurring outside the United States, right? But if you read Chevron's recent earnings report, they talked about how production's hit an all-time high. You can see the same thing from ExxonMobil. Like, yeah. The bigger issue in the American side, to me, will always be pipelines and refinings. In your head. Next thing I say, the Replicon tells you what stocks to buy is fake. I know, right? It's like listening to the Bed Bath and Beyond subreddit, right? No. Yeah, we have an underinvestment problem in energy infrastructure. I am less concerned about drilling new holes. To me, it's all about the transportation and refining capacity issue, right? Jordy, this is an interesting comment, by the way. We're now making peak oil. I don't know about that. I've read that article recently going around talking about China may have hit peak oil. I don't even know if I believe that, mainly because I think the way chemistry evolves, we'll find new uses on the chemical side. Hopefully the world is going to get beyond peak burning oil, not peak utilizing oil. I have very few problems pulling oil out of the ground. My bigger issue is setting on fire. ExxonMobil has a good growth path, but Chevron doesn't. Chevron's going to struggle to offset declines without a big acquisition. Agreed. But yeah. The peak oil argument's really interesting because at a certain point, we are going to hit peak oil. But here's the thing. When I was in grad school in the middle of the 2000s, I heard peak oil was right around the corner. I read articles in the, about 10 years ago talking about peak oil is right around the corner. It's also, I've heard oil's going to be completely dry. I was reading those same articles. So peak oil, running out of oil, And the upcoming, government debt crisis in the United States is something I've been reading about for over 20 years. And it seems like regardless of where the numbers move, the horizon just gets pushed out. Thus, I'm always going to be a little bit skeptical about that argument. Rad, you had a professor who argued peak oil was in the 70s. We've been stuck since. Yeah, that's crazy. That's insane. Mainly because it's kind of insulting towards the oil industry, like they did not create new mechanisms to make existing wells more productive, right? Padres fan, any reason for the applied materials dump or just lumped in with the whole sector? Tech's down, bond yields are up, dollars are up, China's down. Why would applied materials be doing anything different, right? No, it's following tech. That's all. Rad, can we agree the infrastructure investment needed to move off of oil is far larger than nations are willing to invest? I don't think there's any desire to actually move off of oil. That's the fucked up thing. I think it makes for good, like Greenpeace headlines. I don't think it's anything close to practical. Right? And I don't think we should be trying to move off oil. We'll never move off oil. We should try to move off burning oil, i.e., try to find a way to replace the usage of gasoline, try to replace the usage, by the way, of thermal coal. We'll always have a need for metallurgical coal because it makes sense. We'll always have a need, for example, for using oil for essentially hydrocarbons in chemistry. It makes sense, right? If we can get beyond burning oil, that's what we should be trying to do. Jet fuel, yeah. Jet fuel is an interesting one. Like, a little tougher, right? A1 jet fuel is very, shall we say, carbon efficient. Like, that's the thing. If you try to make a plane run on pure, like, batteries and electricity, the problem is planes usually like to be lighter weight. And believe it or not, batteries weigh more than fuel. The week has been gross. This week has been utterly stupid. And I don't say that just because some of my favorites are down. No, if we missed on inflation, I would have understood. But like, bonds responded more crazy for a 0.1% overshoot when year over year PPI numbers are 0.8%, which is bad, which is very low. All right. Bond yields are going to overshoot upward on that news, as opposed to a third consecutive month of CPI, particularly core CPI, coming in cool. That's what I find shocking. Ooh, Mo, yes, we do care. Padres fan, yes, still holding out a video call. What I'm hoping, like at this point, by the way, I'm not doing purchasing this morning. Fuck no. I'm sitting on the sidelines waiting. What I want to see specifically happen is you can see on this chart, we are approaching the 50-day. Okay? So right around 442. We did not make it there. All right? We did not make it there. In fact, we bounced almost cleanly off 443.5. Do we test that number? Next week's kind of light on catalysts, right? Kind of light on catalysts. So do we test that? I don't know. 440 would have been interesting because technically we do have a gap to fill if we believe all gaps get filled. Padres fan, you feel the market is 1 foot in, 1 foot out? I would agree with that, yeah. People who capitulated to bulls are waiting for the first signs of anything negative, just take money out of risk. Yeah, the argument people keep saying about, oh my God, no one's bearish anymore. Oh, bullshit. The amount of puts that got purchased just this week is massive. There's been a few different trusted sources on Twitter pointing that out. Like, a lot of downside protection is currently being bought, which I think is natural. There's a difference between trading around 400 to 410 when you could look out and say the trajectory for the next 3 months in inflation is absolutely going down, to right now, you're not sure if inflation's going down. That energy price issue might become a problem. Might. And there's a difference between being above 440 and being 410, right? No, it's up a bit. I'm at reverse repo, 13 billion. The problem is the Fed is paying better than Treasury right now, which will stall the usage unless something changes. Interesting. Sick Chief. Hey, everyone. Hydrate. Sick Chief's around. Yeah. So this type of market I want to sit and watch. Prefer being 420 or even 840. I would agree. So yeah, I want to see what happens. Boromir, you like it when the bears start saying that Nvidia will fill its down gap? I want to point out in the next, 2 weeks, we get the 3 most interesting earning plays in the market. Technically 4. And they're all tech. They are all tech. First and foremost is Nvidia. First and foremost is Nvidia. The expectations is their earnings are going to be fantastic, and yet they're selling off going into earnings. Not the first time that's happened. You can see on this chart, Nvidia basically dropped 8% in the week going into its last earnings. And we know what happened then. All right. So it's interesting in that one. That's number 1. Number 2 is Palo Alto. I mean, what is it worth that these guys are doing an after-market close earnings report? Because that and Fortinet has literally shaved off about 10%, about 15% actually, off of what's widely considered the best cybersecurity stock. So, another interesting one. Third up is Applied Materials. Absolutely Applied Materials. All right, look at this. Last night, Tokyo Electron spoke. Tokyo Electron. When we talk about semi-caps, we usually talk about 4 companies, mainly because we have a bit of a bias towards the West. It's not fair. The 5 biggest semi-capital equipment manufacturers, at least by revenue, it's Applied Materials, ASML, Lam Research, Tokyo Electron, and then KLA. All right? Tokyo Electron is a sexy company. As the name tells you, this is the largest Japanese semi-capital equipment manufacturer. All right? Tokyo Electron spoke last night. Interesting observation from then. They said business in China is fucking booming. China is placing as many orders as it can for legacy fab equipment. Legacy semiconductor manufacturing equipment. Anything that can produce wafers at a process node larger than 14 nanometers, China is trying to buy as much of it as possible. Yes, part of this is absolutely fears over US restrictions going down. But even if there wasn't, there is something we've been talking about for a few weeks, which is the idea that if China is getting pushed out of leading edge manufacturing, then they're going to do the same thing they've done with every other industrial manufacturing sector they've ever done in their life, which is fine. Flood the lower end with supply. This is why I think there's significant danger for some of the more legacy fabs that do not have any kind of true speciality. So UMC could be at risk. Texas Instruments could be at risk. Analog Devices, Microchip. By the way, Analog Devices is the one that I'm pretty sure is probably the safest. This is a longer term trend. Here's the real risk. China's also building their own semiconductor manufacturing sector. A lot of the lagging edge fabs, they operate on 6 and 8 inch wafers, not even 12-inch wafers. Because a lot of the times there's not a lot of incentive for Applied Materials or Tokyo Electron, etc., to basically refresh machines they built out 20 years ago to now handle larger wafer sizes. Chinese equipment manufacturers may behave differently. They may say, fuck it. The market's there now. And they may flood the market with 12-inch tools that are essentially, 20 years old otherwise. And if that's the case, you could see the rise of fab companies in China who can potentially squeeze out the most commodity-minded chips possible. The reason, by the way, I say Analog Devices is probably least at risk is a lot of their stuff is most proprietary, small batch type of stuff. Okay, are we back? The shipping cartels, guys, they don't want me talking about it. They don't want me talking about it, but yes. So, Russ, my question for you, my friend. How much of what we're observing in shipping prices rebounding is supply constraints, so think specifically Panama Canal, versus legitimate rebound in industrial activity? Because you realize, from an industrial activity standpoint, there is a narrative that's starting to pop up. Right? PPI rebounding. Demand for energy, by the way, seemingly increasing. Separately, something Wendy and I were looking for, by the way. The price for airline tickets is going down. Is demand starting to slow finally for travel? Read Maersk's latest quarterly report. I know Maersk called out the expected demand was not coming back. I don't know how much of that, though, was European specific versus the, say, Asia to US route versus, say, specifically South America to US route. Right? If only there was competition in the ISP space. Let's not get me kicked off this platform, because I agree. Go, guys. People love Hershey that much. They hope that I would come back holding Hershey. Be like, this little fucker. By the way, I like how you called out the thunder. Yep, there was thunder this morning. I don't think I was awake. I knew it happened, not because I thought I heard it, but because I felt the rumbling, not from the thunder, but from Hershey's dumbass jumping on my bed. Yeah, they aren't super optimistic, but what they're still raking in cash. To be fair, when have we known Northern Europeans to ever be, quote, optimistic? Right? Yep. Dumbest money, here we go. Passenger volumes. Yep. I love data like this. God damn. Oh. What I find most interesting about this specifically, by the way, anytime I see data like that, let me make it so you guys can see it, hopefully. All right. I want you to focus on the 2020 numbers for a second. God. Such a reminder of how insane COVID really was economically. But yeah, I see that we're definitely up year over year. We're definitely up from 2 years. We're barely up, but we're still up from 2019. So that all makes sense. I mean, I wonder what type of travel is occurring here. Is this like business? I've long had the belief that business travel would be a little bit slower to rebound. Dumbest money, we are in line from 2019, yeah. But prices were down. Like in the most recent CPI report, there was a bit of a shock drop in airfare, which was interesting. Hi, Spencer. But full steam ahead with plant visits and business travel more than we've ever been. Interesting. B Hood, you think business travel's been on that whole rolling recession vibe? Business post COVID traveled a lot to have meetings, catch up face to face, but then realized this was an easy cost. Yeah, so part of the reason, and let me go ahead and let's chat for a second. I am probably erroneously extrapolating my personal experiences with what I expected would happen broadly. Russ, you might appreciate this. Do you know how long it took for my company to roll out Zscaler? Something like 2 weeks. And originally, like, there was a whole project plan, I believe, later on that year. All right, this was back in 2020. There was originally like a project plan to roll it out, like this phased rollout of like 4 months. We rolled it out in 2 fucking weeks because all of a sudden everyone went remote. All right. Like, COVID made IT implementations like that much faster because you had to. I know what happened is that from a budgetary standpoint, we pulled a lot of future budget into the current year to do all of the system implementations that we wanted to do to make it so more people across our organization could work remote because we had to. What part of the budget do you think that came from? It was future travel. All of it was future travel. Like, we crimped the next 3 or 4 years worth of business travel. And by the way, what B Hood's talking about is actually what I also would have expected, which is post COVID, you had a lot of teams, a lot of functions who had not met face to face in well over a year. Immediately, you'd see some catch up travel, but from like a longer term perspective, whereas say every 3 months I may have been flying into England, we would have pushed that back to like once a year at best. Dumbest money. Wait, are you telling me they didn't cut CEO pay to pay for it? No. No. I'm just kind of chuckling at that because shortly before this happened, we fired a very high level executive for one of the most hilarious reasons. Yeah, I'll talk about it. Most of the time, I've been around companies where we've been made aware that executives were like fucking around on spouses. It's not that big of a deal, but when you get caught on a kiss cam for a local sports team, kissing a senior vice president who reports to you while you're married, yes, that's a problem. Just saying, that's a problem. That actually happened. Yeah. Yeah, exec was inside. No, much worse. Like seriously. Oh, and you know what the worst part was? You know what the worst part was? This is before the whole COVID going home. Like I worked in HR. I'm in the same section of the office where like a lot of the most senior execs are. It goes without saying, if you're gonna print something like, say, the severance letter for then the senior vice president who you're then going to fire because of all of this, you don't fucking print it and leave it on the printer for like 30 fucking minutes. So I saw that too. Anyway, yeah. Anyone who tells you like HR is full of really smart people, I, hopefully what you consider to be a very smart person who's worked in HR, will tell you no, it fucking doesn't. By the way, if anyone's curious, I'm sure you're not. The exec in question, the senior vice president, she was quite attractive. Just saying. Just saying. Still shouldn't have done it. That was wrong. Anyway, people say HR is full of smart people. If they're lying, yes. I I I had to bring that letter. I had to pull that letter from the printer and bring it to one of my vice presidents and be like, I think one of your people left this. And she just looks at it. She goes, "Oh my fucking god!" I'm like, "I didn't read it." Yeah, I did. Call him. U.S. diesel prices surge, anticipating a soft landing. Yep. Hey, Luke Dor, what kind of entry level HR positions do you think are out there? That's an interesting question. Depends on kind of. A lot of times you might see it in like a service center slash contact center. So this is the first line of kind of like inquiry. That's the true definition of like entry level. There's a sneaky racket for corporate HR, which is they tend to use like graduate programs from specific colleges. They have like these pipelines set up. That's why I tell people, like, if you're ever get a master's degree and you want the best bang for the buck, seriously, HR programs, Minnesota, Purdue, Cornell's one of the best. Illinois is one of the best. I went to Illinois. Like, these programs pay for themselves easily. I believe Buffalo. What kind of advice would I have for someone transitioning from academia to industry? I don't know if I'd have the best advice, mainly because I think it's probably very specific to which sector. Like, are you talking about like engineering? Are you talking about like, economics? Like, I don't know what the type. The thing that I would say, especially for startups, is, man, I'm not. I don't think I'm the best person. I'm sorry, Balloon Buffalo. I don't want to. I want to lead you astray. Sounds interesting though. If you want, reach out to me separately on our Discord. Spencer, do I love Mark Cuban because of the Indiana connection? Abso-fucking-lutely, yes. We'll say biotech. Fair enough. Fair enough. The only thing I'll say about biotech, I have been recruited several times by different biotech companies, including some we've talked about here, which is always fun. Here was an actual. Hold on, let's chat. This is fun. This is fun. This is an actual conversation from a recruiting standpoint I had with a, shall we say, New York based biotech company we have occasionally talked about. All right. Hey, we want you to come in and build out an analytics function, really overhaul what our HR function is doing. We need better visibility into people, etc. And it's a biotech company. All right. And through our conversations, they tell me this is what we expect for you in the next year or so. We are in front of the FDA right now for a significant approval process. If it goes through, we need to know how to hire about 1,500 people. So basically double to 2.5 times the workforce we already had to then execute on both manufacturing, but then delivering this drug, selling the drug. If it does not go through, we will need your help in identifying 40% of the workforce we will immediately fire. That's why I never wanted to go into biotech as a sector. I'm like, fuck no. Like, literally, my job was either to help the organization expand by 250% or contract 40%, depending on a decision that would come up between 8 to 12 months. So they wanted to hire me in advance to kind of prep all the systems for that type of decision. Wild shit. Rowdy Russ says, Illinois master in HR is like 100% placement rate? Yeah. Yeah. Even in a bad economy, I had like 15 interviews. When I walked out of grad school, I had offers from Samsung Electronics in Korea and Sears Holdings in Chicago. Every day I wonder how different my life would have been if I had chosen Samsung. Spencer, will there be a new wave of workforce that hops to new companies for stock-based compensation? Seems like young professionals are more interested in stock market. So here's the thing that I'll sit there and say. The amount of companies that grant stock to entry level or fresh out of college is not actually that high. Amazon does it for pretty much everybody. They're kind of the exception. There's going to be areas, particularly more master's degree graduates, I would assume, and particularly for like software, like I'm sure. But all of the programs in particular that I've got knowledge of, like you got paid a sign-on bonus. It was never stock. It was just cash. Stock-based comp is way easier to negotiate versus base salary. And also, to be fair, I didn't work in tech, right? So yeah, stock-based comp is way easier to negotiate versus base salary. Almost certainly, yes. Someone say money. By the way, this is a really good question. Out of curiosity, what makes those schools good for HR? You're going to laugh at this. This is actually a really good question. This is a super good question. I want to pull it up. All right, ready? All right. It's history time, my friends. This is a map of the United States. All right. So, all these programs I mentioned, all right, all of these different schools that are, quote, really, really good at HR. Let me see if I can change for my settings. Where is it? Where the fuck is it? Can I make it so you can see? No, that's not it. It's chat settings. Settings, general. I don't know how to make it so you can see my mouse. All right. But here's the thing. Someone say money has a really good question. It's worth it. Why are programs in the state of Minnesota, Michigan, Illinois, Cornell, upstate New York, the old Rust Belt, why are they known for HR programs? And it has to do with the fact that the real start of, quote, HR back in the day was industrial relations. All of these programs are over 100 years old. Think back to the 1800s to even early 1900s, when you had a lot of steel companies, all right, paper mills, etc., etc., etc. So you had a lot. This was the rise of unionization in America, all right? So at the time, company management needed people to be able to handle this. This is before the automotive industry. That's how old school this is. Really, it's down to steel companies and paper mills. All right? Coal companies as well. But when you had the rise of organized labor, management knew they needed the rise of a certain type, certain caliber of manager to specifically handle labor relations. Thus, demand creates supply. You had a lot of these old schools create these programs specifically for churning out managers specializing in the new emerging field called industrial relations. Cape Cod Flats. Ah, yes, labor relations in the Rust Belt. You didn't know Pinkerton started business schools. Yep. That's the story. Child labor in HR must have been. Oh, let's not go there. That's the story behind it. Now, in the last 20 years, something different's been happening, which is unionization in America has become less, I would say, relevant from a corporate standpoint, and instead the rise of, quote, human resources or talent resources, right? And now it's a different calculation. If you go to a top flight business school, you go to Harvard, take the top 100 people, rank them from 1 to 100 in overall intelligence, competence, etc., right? Sorry about that. I'm telling you guys, the Illuminati doesn't want me talking about this. All right? They absolutely do not want me pointing this out. But here's what happened. All right? Now all of a sudden, this new field of like talent relations, HR, etc. If you want someone who's good in the space, you don't go to MBA programs and get them. Because if you list out the top 100 people in an MBA program, from overall competence being number 1 and the shittiest person being number 100, the top 10 all want to go into either operations, strategy, or finance. The next 30 or 40, combination of operations, finance, marketing, etc. The person who actually wants to be in HR from a good top flight MBA program is very likely in the bottom 50%. That's all. That's all. That's the story kind of behind that. So now these specialty programs have found a really good niche where they can essentially develop you skill set wise as though you're an MBA. The difference is the programs aren't expensive and HR people are not going to get paid the same amount as an MBA. Ironically, Sears Holdings did, which is why I joined them. That was fun. But that was a bit different. I went into the highest paid portion of HR, the field of HR analytics. Someone say money. Are there any West Coast programs that do well for HR that are not legacy? There's an interesting one. The West Coast has one of the most preeminent programs in the country for the field of organizational design. It's University of Southern California. If I went back to school today to get a doctorate, that's what I would get. The two schools I would do, you guys have heard me talk about it all the time. Chicago's number 1. I'd go University of Chicago for economics, specifically behavioral economics. Alternatively, I would go to USC, specifically for org design, org effectiveness. It's the coolest shit. It's really cool. Spencer, Jake, I would live it with you because it would be expensive as fuck. I would have to live with you. Bruce Legend, why did I do accounting but not go into accounting? Because accounting actual work sucks. But understanding everything I've done in my life has turned out to be because I'm really curious about what gets people incentivized to make actions. HR, accounting, economics, they all correlate around this. How do you get groups of people interested in doing a certain action? That's why. You don't think you've ever met a happy accountant? That's actually fucking hilarious. So yeah, hopefully that answers your question. Someone say money. It's a topic I find really interesting to kind of look back on. The whole reason why you have like HR specific master's degree programs. And again, guys, I'm telling you, all right, I do not regret getting a master's degree from Illinois at all in the field of HR. I actually like it. All right, the most of the people you meet in HR are fucking morons. They couldn't have made it at that program. All right? If you are an undergrad wondering what you want to do with the rest of your life, There's a lot worse you could do than going to Cornell, Minnesota, Michigan State, Illinois, specifically graduate level, quote, HR, industrial relations programs. Rather about time. We went over this, Jay. You got into HR because it's full of MILFs. The funny thing is my program was a spring semester. We had 34-ish people, and I think we had 6 or 7 dudes total. It was predominantly women. Typical. Yeah, kind of is. Did someone say MILFs? Sick cheese. Yeah, guys, I have no clue what's going on. These are different issues hitting. One of them, my computer went out. I got blue screened. But this one and the first one, I'm checking now, and it's something with the stream itself. I don't know if Twitch is angry today. Spencer, would I date classmates in undergrad? Tim has the right answer. That's a stupid question. Yes, I would. Yes, I would. I won't date coworkers though, because like I always thought there would have been an ethical issue. Twitch doesn't want me talking about HR mills. Yeah. Anyway, Jay didn't date in master's program. That is absolutely not true. Jay absolutely did, and he had a lot of fun doing it. Kind of wild. That's an AI generated scene. Spencer, I wouldn't date my classmates. But when you're on a campus, Russ, can you please tell Spencer how large University of Illinois is? Like the point behind my commentary previously was don't date with if your program's small, don't date in there. Date around the program. That's fine. Just don't date in the program. That's all. Dentsu. Coworkers was your bread and butter. Married to one now. You didn't work for ExxonMobil, did you? ExxonMobil was the fucking craziest. We used to joke that it was like the moon cult for like Washington Post. The number of people at ExxonMobil who like were married to coworkers was really high. ExxonMobil was okay with it. Date the professor? No. You dated a teacher in college. She gave you a raging review. She better. Spencer, did I have ever have any sexy professors? I think one or two. Guys, I apologize. Something's going on with the connection. This looks to be a Twitch issue. This looks to be a Twitch issue. Something is going on. I have no clue what it is. But on my diagnostic panel, it's the connection between me and Twitch. Meanwhile, all my other connections are working fine. Amaranth, yeah, Amaranth stream always works great. Amaranth, hire me. Yeah. Anyway, Denetsu asks, have I talked semis yet today? You feel like there's an opportunity. The Applied Materials earnings is one of the most interesting ones coming up. All right. By the way, it looks like we are finally filling a gap that previously existed. Right? AMAT could be interesting. All right. AMAT could be interesting. Remember, the story going in, at least the narrative going in right now for semicap, is they're getting no help from memory as a sector at all. All right. Memory spend on CapEx for this quarter and even for next quarter is expected to be literally record lows. Right? Mm-hmm. At the same time, you have the news specifically from Tokyo Electron, which is China's buying a bunch of lagging edge equipment. Applied Materials sells lagging edge equipment. And if you play the whole cyclical notion, you buy, quote, cyclicals, at least on the traditional sector. When the PE is high, their PE is expected right now around 20. Which, believe it or not, historically speaking, that's high. Their earnings are next week. The problems you face is simple. All the bad news, all the bad headline news that comes out of China, Applied Materials sells a lot into China. They do. Yeah. We know TSMC has not cut CapEx. Right? So Applied is not in the same situation as Lam. The only thing Lam had that was good was their trailing edge etch business, particularly in China. Applied also has a little bit more on the leading edge side to traditional foundries. They don't have the same amount of exposure to memory. They still have exposure to memory, though. Pretty significant. Applied is one of those things that there is no reason the stock, if the market drops, there's no reason the stock wouldn't drop. Right? From that statement is stupid. The best time to buy Applied was when it had low PE and was cheap at 75. When is that? Okay, so you're talking about the October low. Yeah. Right? Sure. I mean, that's with 8 months worth of hindsight. But keep in mind, if you bought it this time, you bought before all the memory cuts were complete. Like, you weren't buying the last cut or even the cut before the last cut. It still took 2 more cuts in the memory sector. Meanwhile, right now, at least if you believe this, the EPS for next year is supposed to be around $7. The expectations is you could get revisions to that going upward. That's why. So, yeah. Had you bought in October, by the way, their EPS revisions then came after that. They actually went down after that. But yeah. So it'll be interesting to see what happens. I'm not jumping in yet. I don't know if it's because I'm shell-shocked from this past week or not. Like, I truly believe you could see a lot of sidewards movement in the indexes. I think value's the better place to be. Healthcare's looking really good. Healthcare's looking really nice. I also think consumer cyclicals could do well, but if it almost feels like a landmine. You have to pick the better ones. The fact that you saw the drop in airfare makes me think travel associated stocks are no bueno for the rest of the year. Yeah, hindsight's always 2020. Agreed. But I don't think I mentioned the fourth interesting tech company earnings coming up, and it's not next week, it's the following week. It's Oracle. How does Oracle report? Oracle is one of the biggest cloud providers. Number 4, number 5. You don't like consumer cyclical at all here? Which company in particular? So I'm not talking about as a sector. I mean, you have to pick like winners or losers. But like consumer cyclical in this case, I'm talking like Ulta, Lulu. God, Ulta's chart looks wild. Cruise lines telling you that travel isn't in a great place. Yeah. But that's the thing. Like we're coming out of like the seasonality. I would assume you don't see a lot of cruises pick up in September, right? Maybe I'm wrong. Maybe I'm wrong. Like Ulta looks interesting. Check Lulu out. This is an interesting chart too. And Bitaska, you keep waiting for Estee Lauder to bottom China. Yep. Losers get smashed and winners probably get barely rewarded due to caution in the whole sector. Do not disagree with that. Lulu's chart is wild. Look at this. How's Chipotle doing? Is it 1800 yet? Oh, it's getting there. 1800 is when I said the stock gets interesting. I would love to understand why they don't split. Like, this is a company that should split. You imagine being in that stock the day before they announce a split and they go probably nuts. That's ELF. What's ELF looking like? They're the ones that had just an amazing earnings report. Yeah, it's okay, promo. We will forgive you. The Ravager. Have I seen TT? Oh, yeah, it's a biotech. Yeah, T2 Biosystems. I know it's a bit of a meme stock recently. Here's what I mean. Like, the $135 million company. So yeah, I don't know. Is Kyle Bates a good China follow or a bad China follow? I forget.